Okay, there was a little glitch here, so I'm starting afresh. Welcome you all to the weekly webinar of Proficient Equities. Myself, Shumay Goswami, and today it is 18th of August, 2018, Saturday. We are meeting here to take a stock of the situation, how the global equities and the our domestic equity markets have performed in the past 1 week and how they are likely to do going forward. So as usual, let us start with the US dollar index, how the dollar index have fared against the 6 major currencies across the globe. And this is the daily chart of dollar index. As you can see, there was an extreme strength in dollar index for the past 2 weeks. There was in fact a new breakout in our domestic front. Also, dollar breached the 70 rupee mark, and this was for the first time that happened. So the strength is pretty visible here from the chart. The index is trading above most of the important moving averages of 50 and 200-day moving averages. Right now, there was little weakness yesterday. 96 was the last price it quoted, and going forward, 95 was the last bottom that it made. So unless that is broken, prices are likely to go higher, and 100 for dollar index is a very legitimate target. So the downward trend for the strength of rupee is likely to continue, and the dollar index strength is likely to continue as well. And if that happens, then what is in store for the commodities? Let us open the chart of gold. Yeah, this is the chart of gold, and this is the daily chart of gold. And as you can see, the downtrend is pretty clear. Gold is trading below the important moving averages. The lower top formations are pretty visible. $200 mark was broken with high strength. There was a strong volume, and this downtrend was visible from even the first week of April, when these important moving averages were broken downward. And this is the direct consequence of the strength in dollar, right? Since all these commodities, the gold, crude oil, silver, natural gas, all these are denominated in dollar terms, a strength in dollar is likely to weaken these commodities, and that is what we are seeing here in the chart of gold. Yesterday's closing was at $11.84 per ounce region, and we have seen a substantial resistance at 1220 mark. 1220 was an important support. Now that is broken, it will become an important resistance. So if prices rise by any chance, it will again give a shorting opportunity, keeping the stop loss at 1220 region. Let us see how crude oil has fared over the past few days. Crude oil has also seen a substantial sell-off, and right now it is testing the 200-day moving average, and today's or yesterday's low was also the low that occurred in the second week of June. So this is an important support region, and if 200-day moving average is broken, then prices for crude oil is likely to go even lower, right? So immediate resistance is at 67.8 to $68 per barrel region, and the rises will be opportunities to trade it from the short side. So that is our overall opinion in the commodity facts. The strength in dollar index is likely to weigh on the important commodities like gold, crude oil, and all these things. So now let us come back to the equity markets and let's see how S&P 500 have fared over days. There is nothing new that happened in the large cap index of the US market. 2850 was the last price for S&P 500, and the higher bottom formation is visible, pretty clear it is, and that is the classification of an uptrend. Prices are obviously trading above important moving averages, and we can construct an upward trending line. So yes, prices are in uptrend. This week's low was at around here, $2,800 region, and that was also the low of the first week of August. So it has, we can say it has taken a support there. In a bull market, we can expect supports to hold, but resistance are likely to broken out. So right now, stop loss for S&P will be 2,800, and unless that level is broken, the intermediate term uptrend is likely to continue. And if that is the case, our back home, our equity markets are also likely to follow. And this is the daily chart of our equity market, which is the Nifty 50. On Monday, there was a gap down opening, and prices stayed there for the entire session. But on the subsequent days, we saw a legitimate pullback, and in the process, prices created another higher bottom, and it actually gave a new lifetime closing as of yesterday. Yeah. So when that happens, when an index gives a new lifetime high closing, there is nothing much left for further discussion, because trends remain pretty clear and the trend is upward. There is little doubt about that. Trend is upward in almost all time frames, because we can spot the higher bottom formations, we can spot the prices to trend higher against the moving averages, we can spot the upward slope of the moving averages. So all these things indicate that this is an uptrend. The primary and the secondary trends are upward, and the prices are also closing at the lifetime high. So this week's low, the Monday's low, that occurred at 11,340. That is the new benchmark for the short-term upward to sustain. Previously, it was 11,200 region. So 11,200 region was not broken, and the new higher bottom has been established at 11,340 region. So going forward, as long as this level survives, the short-term uptrend survives in Nifty, and we can expect higher prices for this index. So we are only recommending to trade Nifty from the long side. There is no point in talking about valuation. Stocks may be overvalued at this point. They may be overbought at this point, but we have to go along with the trend. As long as the trend is upward, there is no point in fretting over whether the stock prices are overstretched or not. So that is the view in Nifty going forward, that unless 11,340 gets broken downward, the longer term uptrend is likely to continue. Having said that, what are the most important stocks that we can trade from the long side going forward? Now, one thing I'd like to reiterate here, although I have mentioned it many times in our previous webinars, that this is an extremely stock-specific market. Action is extremely specific to only few stocks, only 10 or 14, 15 stocks in the large cap sector are performing, and many mid cap stocks and even many large cap stocks are not participating in this bull run. So we have to be where the action is, and I do not see many sectors which is participating, but there are some important outperforming sectors. First of all, I would like to draw your attention to the FMCG index, or FMCG sector rather. There are many strong performance that we are seeing in this category. The first is ITC. As you can see, this is the daily chart of ITC. There was a big gap down in July last year. That is over 1 year ago, and that gap down occurred with the introduction of GST that weighed heavily on ITC, and ITC went into a hibernation or retracement phase, and that phase occurred for a quite long time, almost for 12 months. And after all these 12 months, the stock is actually broken out. And let's come to this part. You can see this 10-month-old consolidation period when ITC price never breached 250, made a top at around 280 to 285 region, and only on the last week of July this upside was broken with strong volume. So this was the volume, as you can see, on 27th of July. And also look at these gaps. These gaps are the breakout gaps. The breakout gaps are suggesting that this is the beginning of a new uptrend, and much more steam is left in this movement. And in fact, the previous top of 350 that ITC saw in first week of July of 2017, that top has become the nearest target for ITC. So currently the price is quoting at 314 region, and nearest target is 350 odd levels. Overall stop loss will be 290. So this is a longer term play. I have also mentioned of this stock many times in our earlier webinars, and this stock continues to perform pretty well. And FMCG sector as such is doing well, right? There are many other participants in the FMCG sector. Another star performer is Hindustan Unilever, HUL. This stock also closed at a lifetime high, and here we can see let me draw here an ascending triangle, because this ascending triangle has broken upside. Yeah. So this is a form of ascending triangle, which is a continuation pattern, and previous trend was an uptrend. There was a consolidation zone, and the consolidation zone resembled the formation of an ascending triangle. The breakout has occurred yesterday, and with this breakout we are having a target of around 1760 to 1640, so around 120 points, so approximately 1920, right? So 1910 and 1920 is the legitimate target for Hindustan Unilever. And if that is likely to happen, then this bottom which occurred at 1728 should not be broken. So you can trade for this target of 1900. Currently the price is 1784, so you can trade this stock for a target of 1900 provided 1725 stock loss is not taken out. So Hindustan Unilever, we are also expecting some short-term strong momentum in Hindustan Unilever, like ITC, and you can trade it with a stop loss of 1725. Another strong player from FMCG sector that is taking our fancy is Dabur. This is also a very strong player, and the momentum has been tremendous since last week of July, and in 3 or 4 weeks, the stock has given approximately 20% return, which is phenomenal. And yes, yesterday this stock showed another breakout, closed at another lifetime high. So all these stocks in FMCG large cap sectors, that is Dabur, ITC, FMCG, Britannia, all these stocks are likely to go higher going forward. These are actually where action is being seen. The next section is IT, and we see Tata Consultancy, that is TCS, which is a very slow mover. As you can see from the chart, the uptrend is pretty resilient, pretty strong. Slope is not that great, but it is very sustainable, longer term uptrend. Yesterday's closing was at 2012, which is a life high for this stock. So it is a bit conservative trade. The stock is a bit conservative one. There is not much volatility, but an important bottom has been formed at 1940 region, and that bottom, as long as that bottom holds, prices are likely to go higher in TCS. The same is the case for Infosys. This is the chart of Infosys. Daily chart, as you can see, the stock has seen some strong momentum lately and trading at lifetime high. The slope of the moving average is also upward, showing the strength of the uptrend. And pullbacks will be excellent opportunities to buy. Overall stop loss will be 1355 region. And a better idea is to create a core position in these kind of stocks, because you are trading for the longer term uptrend. You will have to create a core position, and then you can build around that position whenever there is a pullback like that. So that is how I prefer to trade these stocks in cash market. Obviously, you cannot do it in futures market because there are lots of constraints there, but definitely you can do it in cash market. So you have to build your position over time. You have to rely on this longer term uptrend, and overall stop loss will get 1355 region. And these two stocks I recommend from the IT sector, right? There is a consumer durable sector. In this sector, I find Godrej. Godrej consumer product, popularly known as Godrej CP, is a stock that we choose from this sector to be traded from the longer side. And you can see the longer term uptrend here. This is how the chart looks on a weekly time frame perspective. The uptrend is pretty strong and pretty obvious. Yesterday's closing was not at lifetime high on weekly basis. On weekly basis, it was a lifetime high, but not on daily basis, right? But obviously, a minor support region has been established at 1280. So you can build your long position around this stop loss of 1280, and this stock is also likely to go higher in short term, right? Now there are some contrary play, and I would like to say that the PSU banks, although there was some very strong primary downtrend in PSU stocks, but some of the PSU banking stocks are right now showing signs of a bottom formation, and that is what is interesting here. We pick the stock of Bank of Baroda, and the Bank of Baroda stock is actually flirting with its 200-day moving average for some times now. Chances are high that it will go above this important resistance. And what gives us a confidence is that this breakout gap, look at this breakout gap on the 30th of July. And this breakout gap is actually, that gap actually occurred above this resistance. So it gives credibility, it adds to credibility of this breakout gap, which suggests that there could be the beginning of a new uptrend. And also look at this this kind of price action on last week, when the prices actually tried to fill this gap. Also it took some support, and it did not give a closing below this gap. And the following day, that is yesterday, we saw some renewed buying interest, and the stock is likely to trying to form a bottom end in this region. So we are seeing evidence that this stock is gaining momentum, and the 200-day moving average is broken upward, and right now prices are at 146 region. If prices trade convincingly above 150 region, then we are getting a long target on the upside. Immediate target will become 175 region, and so you can buy it above 150 region. You have to keep a stop loss at 140 region, and overall stop loss will be 170. Overall target could be 175 region. So Bank of Baroda and many other PSU banking stocks as well, we can see some bottom forming pattern here. But this particular stock is the best in that category. Let us take a look at the chart of State Bank as well. Yeah, that is what gives us confidence. So, SBI is actually already trading above the 200-day moving average, and a higher bottom has already been formed. Yeah, so most of these PSU banking stocks are forming a kind of bottom, and this bottom at 290 region also coincides with the support. So yeah, there are signs, and stochastic on the upper plane of my chart also shows some buy signal here. So even in State Bank, you can keep a stop loss at around 290. Prices now are 302, and you can expect a target of 325 region. So that high was made last week when State Bank declared its quarterly numbers. That was a little shock. Prices retraced, but after a little consolidation there, State Bank chart is again looking poised for higher prices. So PSU Bank is some contrary opinion, some contrarian call from our point of view. And last but not the least, a large cap cement stocks, which is ACC. Look at this chart. It gives some good feeling, right? The good feeling comes from the fact that the breakout occurred here on 23rd or 24th of July, and this 2-month little consolidation period actually ended with this breakout gap, which also occurred with strong volume. And right now, only yesterday, the stock closed above its 200-day moving average, which occurred for the first time in past 7 months since February. So these are the stocks; those are likely to outperform the overall general index going forward. As I told earlier, the FMCG and the IT stocks are already outperforming, but if Nifty has really have to hold its uptrend and can continue going higher, then we have to see more participation, and the more participation is likely to come from PSU banking sectors and also the infrastructure. In the infrastructure, we like best the ACC, and in PSU banking sector, we also like SBI and Bank Baroda. But you have to keep in mind one thing, that this bullish opinion that we are giving for this week is valid only as long as Nifty trades above 11,340. If that level is broken, then chances are high that these stocks will not be able to outperform. So that will be our overall stop loss in Nifty. And you have to trade cautiously. You have to manage risk properly, because trading is all about risk management, nothing else. So with this, we conclude this presentation. I hope you liked it. This video will be posted on YouTube as well, and you can give your query or your feedback to that. And okay, so let's meet next week. Thank you and goodbye.